What's up, everyone? In today's video, I'm going to give you 3 things that you can do if the stock market's dropping that will help you manage that internal roller coaster you may be facing and help you feel confident in either sticking to your investment or comfortable in making strategic changes. The market has been pretty nuts, but with these 3 tips, you're gonna feel so much better. The first thing you wanna do is remember the goals for the money that you're investing in your accounts. If you started investing without really setting goals for the money you're investing, this is a perfect opportunity to kind of take a time out and really set those goals for the money. Remember, we're investing for a reason. It could just be for future growth, but if that's the case, when would you like to actually be spending the money that you're putting in the account? Having some sort of time frame associated with when you're gonna need the money will really help you to manage stresses of the up and downs that happen in the market. So you wanna decide, is the money for short-term goals, long-term goals? Is it for retirement? And how much time is associated to each of those goals? Because this allows you to say, okay, if the market drops and it takes a while to recover, do I have time to recover from these losses? If it's a long-term goal, like say you don't need the money for 20 or 30 years, then you have to remember you have both time and income on your side to continually invest, especially when the market's dropping. So it is not a big deal. It's completely normal to go through these ups and downs in the markets, especially over a long time period. But on the other hand, if you're needing that money in the next 5 years or so, maybe you're actually someone that's approaching retirement. In this case, it can be really devastating to see a large market drop and not have that same time to recover from these losses. So in this case, you are really going to have to potentially make some changes. Maybe you sell out of all of your investments completely to, in a sense, stop the bleeding, because you literally might not be able to afford a 30, 40, 50% or more loss. In 2008, the market was down about 40%. So you have to say to yourself, okay, if you've got this large chunk of money that you're planning to live on, you have to mentally ask yourself, what if this amount drops 40% like it did in 2008? And what if it takes several years for it to bounce back? Is this going to change the time frame of your goal? Is it going to mean you retire later? Is it going to mean you buy your house later? And are you okay with that? If you're okay with that, then maybe you don't make any changes. But if that option is definitely terrible for you, then stopping the loss can be very important, because a 10% loss is much better than a 40% loss, right? The problem with this is we don't know when the market's going to turn around. You could sell out today and tomorrow the market could flip and just start to skyrocket back up. If you're going to sell, only do it if you absolutely need the money in the short term and you feel like you just do not want to delay your goal, or you will be devastated if you lose a certain percentage. And that's where I would work with people to help them get into more conservative investments. It doesn't mean all of your portfolio has to get more conservative, but maybe the money that you needed in the next few years gets more conservative, meaning into CDs or bonds or even just cash. So along this line, ask yourself if your lifestyle will change due to the market drop. So if that's you, that's where you go and revisit your allocation and look at getting more conservative. The second thing to do is look at the emotional side of investing. I'm gonna pop up a chart here, but I want you to take a look at this. This is the typical route that people's emotions go through when they are investing. This is one example of an emotional roller coaster a typical investor is likely to go on. So if you can recognize these different points along the journey and your thought process specifically, you'll be able to take a time out when you're feeling really nervous about things, revisit this chart, and then remember that this is a cycle that the market goes through time and time again. And if you could just stay the course for the long term, it really increases your odds of having success. So we see in this beginning side over here that this is when people get that FOMO, right? That fear of missing out. They want to get in because the market's going up. There's a lot of hype and a lot of excitement. And then when it starts to go down at first, it's okay. People are like, okay, they understand that. But then when it starts to really drop, that's where the pain kicks in. So that's why it's really important to actually picture your money decreasing in value by a significant amount and asking yourself how you will feel before you're even in the position of the market dropping. So that way, when the market does drop, you can remind yourself, I knew this was a possibility when I was starting out. We're here now. I'm going to focus on my long-term goal and stay invested and continue to add more if you can, and stay invested on your normal schedule. Because the worst thing you can do, from historically speaking, is sell when you're down here, because you just don't know when the market's going to flip and turn back around, and then you end up buying here. And that means you miss all this upside that's over here, which is what really hurts portfolios for the long term, because you sell when it's at a low and you just don't know when to get back in. So take a look at this chart. I'll link it below so that you could use this for your future success of your investing lifespan. So understand this emotional side of investing so you don't find yourself on this really, really disturbing roller coaster with your emotions. You should feel more even keel overall. Of course, you're not going to feel great when it's going down, and you will be excited when it's going up, but making changes is what can be really devastating to the success of your long-term portfolio. If you look at the chart, when you see it turning around, you're not sure if it's going to go back down. You just get in this repeating loop. The third thing you can do is review your budget and see if you have any extra money that you can start to put into the markets, because it is a great time to buy. Even though it doesn't feel good when the market's dropping, it is actually really good for longer term investors, because you get to buy things on sale. You get to buy stocks at lower price points. Index funds, everything is just lower. So that means when things start to turn around and rebound, you are going to start profiting every time the market passes where you got invested. Even though it doesn't feel good on paper, you actually should be more excited about market drops, especially if you're investing on a regular basis. If your account only goes up and you're investing on a regular basis, you just keep buying in at higher and higher price points, which you should just invest on a schedule, because it does take that emotion out of it. But it's nice when the market goes down, so reframe your mind to actually realize when the market's dropping, it's a great opportunity for you to just keep investing. If you've got any extra money in your budget, put it in, especially if you don't need that money for a long time, because you will very likely reap the rewards of having the ability to buy in at lower price points. Let me know in the comments below other things you find useful when the market's dropping. I only gave you a few ideas here, but I'm sure there are so many other things. Also, I do have an investing course coming out, so if you just need help getting invested, learning how to invest for your long-term and short-term goals, be sure to join the waitlist or sign up, depending on when you're watching this. In the description below, you'll find all the information for my Investing for Beginners course, and I hope to see you there.